Good evening. I'm John Batchelor. This is The John Batchelor Show. This evening, it's a pleasure to welcome Gordon Chang of Forbes.com. However, it is also a pleasure to look forward later in the evening to greeting and speaking with the winner of the 2013 Hayek Prize, Yang Ji-sheng, whose book Tombstone, The Great Chinese Famine, 1958 and 1962, begins to fill in the blanks of Chinese history that are kept from the Chinese people, and you cannot be in the 21st century a fully empowered state unless you come to terms with your own history. Gordon, a very good evening to you.
Good evening, John.
Yang Ji-sheng will be with us, and he speaks Chinese, but we're going to have a translator.
We certainly are, and this is one of the most fascinating periods in the history of the 20th century.
Millions and millions and millions were starved to death on purpose.
36 million.
By Mao's policies on purpose. And I do not ask why. I ask, are the Chinese people aware of the scale of the catastrophe? Does it come to them as a surprise when they look at Tombstone or they see on the internet references to Tombstone?
You can't buy Tombstone in China, and the reason is the party does not want a discussion of the Great Leap Forward, the period that he writes about, because this is a period that it reflects very, very poorly on Mao Zedong. This is the greatest starvation in history.
We begin with the 21st century in China. Fraser Howie joins us, an author of Red Capitalism, because in the 21st century, though the Chinese Communist Party is frightened of its past, the future is assured, right, Gordon?
Absolutely.
The future is assured. It's the past that frightens us. The present also is intimidating to the Chinese Communist Party. Fraser, a very good morning to you in Singapore, and I bring up an anecdote. In speaking with the Wall Street Journal's Abhik Bhattacharya, who participates in Heard on the Street, a very popular morning column, and also Patrick Travanik of Silverstone Asset Management here, late of the Chinese College University in Beijing, I learned that the gold collapse that we're witnessing here in the West, especially since April and May and the better metrics in our economy, the gold collapse doesn't exist in Asia. China and India go, what gold collapse? They're buying heatedly, buying all the gold they can find. Fraser, is this accurate, and does it make sense that despite the metrics, the Chinese love gold? Good morning to you.
Good evening to you. It's basically right. I think the price has certainly fallen, but the desire for buying has certainly has not stopped in Asia. Gold is still seen, rightly or wrongly, as a store of value. It's seen as a real asset. Chinese and Indians both like real assets, and that in the shape of gold. It's very popular for jewelry, for weddings, as a store of value. So any fall in price is seen as just another buying opportunity. It doesn't mean they're right, but certainly culturally it seemed to be hugely popular.
Fraser, it's really interesting because I believe that the Chinese central government is buying gold, but also the Chinese people are buying gold, and they're not buying gold for the same reasons. And I think what the Chinese people are doing is essentially a lot of folks can't set up foreign companies, can't send off their capital into bank accounts in the Caribbean. They can do, though, the next best thing, which is to buy gold. It basically is capital flight for poor people. What do you think of that?
I think there's a lot of sense in that, although it's a hugely inefficient way to store value. If nothing else, it's extremely heavy. If you have any significant amount of gold, just physically carrying it makes it tough to manage. But I think you're right. It's a way of, if you've got real gold, then that is something that you control. It's something that you can handle, you can barter with, you can trade with. It's outside the Chinese financial system in the sense it's not sort of a renminbi deposit. You don't need to be about converting it. Gold has a value in itself that transcends borders.
It turns out,
that does make sense.
Fraser, it turns out that we have in studio a representation of the Chinese, what we say, affection for gold, because Mr. Chang, while you're answering quite cogently, pulls out a very thick gold necklace that he's wearing under his white shirt. Fraser, are you wearing gold?
Not at the moment. I don't know if that's Gordon really looking as a store of value or is some sort of throwback to the 70s or something, some misspent youth or whatever. But gold jewelry is popular. It's seen as valuable. It's seen as a sign of status, and it's certainly seen as a store of value.
Right. Abhik, who is an Indian national, he answered when I asked him, are they selling off gold? He said, for heaven's sakes, they can't buy enough of it in India. So this isn't just a Chinese phenomenon. But now let's connect it, because a week ago, Gordon, we had the surprise HSBC markdown of Chinese manufacturing.
Yes.
And below 50 suggests a contraction. And since China is an export-only economy, Fraser, it's a week later. Has the darkness started to spread in China that the future is no longer rosy, or are they still in denial?
No, I think I think some are still in denial, but even the most rosy optimists are realizing that things are not as positive in China as it would first appear. The IMF has just come out and announced a cut in its growth figures. I find they've come down to 7.75% growth for this year, which is incredible. They feel they can compute it to such accuracy, but even they are getting more and more pessimistic and realize that there are fundamental problems in the Chinese economy which are going to limit growth. And of course, what we talk about 7% or 8%. In reality, growth is nowhere near there. Growth is probably a lot less than that in real terms, and the darkness is spreading. It doesn't mean collapse. It doesn't mean a recession, but it certainly does mean that there are real problems, and people realize that the government needs to take the bull by the horns and really get a handle on this economy in terms of reform, opening up, changing the model, because the old model is broken.
What does he mean by changing the model, Gordon? Fill that in.
Well, China's had a model which was first export-led, and then it became investment-heavy, especially after 2008, 2009, when the government tried to get through the global downturn by spending its way out of problems. And really what China needs is a consumption-led economy. You know, people say, well, the Chinese people are buying a lot of stuff, but consumption as a percentage of the Chinese economy has been falling over the last 5 years. It's now about maybe 35, 36%. That's probably the lowest rate of consumption to any economy in the world.
Does Premier Li say what you're just saying now, or is he avoiding the topic?
What he's saying is, they're going to increase consumption's role in the economy, but they don't talk about what's happened over the last 5 years, and certainly they don't talk about the reasons why China cannot substantially increase consumption, and there's a lot of them.
Fraser, how does this connect to Europe and North America, the Chinese dimming in their prospects, or are we separated?
Well, it connects, obviously, because Europe and America buy a lot of Chinese stuff. So obviously the export markets, and not just for cheap goods, but for other goods as well, are suffering. That the Chinese export engine, whether it be through cheap labor or through heavily subsidized, heavy industry and capital-intensive areas, those exports is not as strong. Europe and the States are not going to be buying as much from China. But at the same time, it's interesting on the consumption, which is often, Gordon, you'll have seen this through the years. Consumption's always been the bright spot. That Chinese tourists are coming abroad, luxury, last resort luxury buyers. It's all the Chinese are the big spenders. But even there, you're starting to see a turnaround. Chinese are not spending as much as they once were. So this idea that somehow you can just extrapolate from previous trends, or that Chinese will always be big buyers of luxury products, just is turning out not to be true. And so that's going to affect the global economy. I think, though, especially if you look at the States, I think the States has done far more restructuring in the past 5 years than certainly Europe has, and certainly China has. So actually, the States may come out of this far better than either of those areas.
Fraser, we just got about 30 seconds. You talked about the problems in the Chinese economy. Which is the most important of them?
I think credit. There's just a lot of credit. The amount of credit that's going into the economy now to basically get lower and lower levels of growth is just frightening. It's a very bad combination of credit and poor growth.
When you say credit, what does he mean, Gordon?
He means debt.
It means the money they don't have. They're just building it up. I report this week, Fraser, just as an anecdote, that Suntech, the great big solar panel builder, went into bankruptcy. Even the Chinese banks couldn't tolerate it. However, I learned that Suntech and all of the Chinese solar panel manufacturing business, remember, they undercut our prices. They drove us out. They drove the Europeans out. In Europe, a German firm tested 30,000 panels installed, 80% failure rate. Why? Because the Chinese companies, overloaded with debt, are cutting costs by putting in cheaper products, and the solar panels are failing. Fraser, that is an immediate failure, but that means that of the panels installed in the last year or two in the United States for 25-year life cycles, they're going to fail. And that's going to come back to China and the Chinese companies, Fraser. They've put rot into the system, and they're going to have to pay the price.
The hidden cost of Chinese manufacturing. Just price isn't the sole arbiter of your product, you've got to look at quality and efficiency, and the Chinese manufacturing is still substantially poorer than many other countries.
Fraser Howie is the co-author of Red Capitalism. Gordon Chang of Forbes.com. I'm John Batchelor.